All right, good afternoon, everyone, and welcome to our second feature of our weekly update presented by SC Securities Research. As always, we'll be going over the main headlines that happened this week in Sri Lanka and looking at a global context. In terms of some of the main headlines this week, I think we need to start off with the Port City project, which finally clears its final hurdle as parliamentary approval comes through. Much of the focus over the past couple of months has been the Port City bills and the numerous rounds of hearings regarding to some of the legalities within the bill. The Supreme Court actually rendered their verdict on the 18th of May, citing that there were certain inconsistencies with the bill, and were it to go through with those inconsistencies, it would need a referendum and two-thirds majority. However, the necessary amendments were made by Cabinet, and on the 20th of May, the Parliament actually voted in favor of the bill finally, which allows it to open up, or the country to open up, to the possibility of foreign investments coming in and providing some much needed relief to the country's foreign currency reserves. In terms of the stock market, there was some early momentum in the all-share and the S&P. However, given the prevailing nature of the third wave of corona that is currently being experienced by the country, with 3,000 cases being surpassed over the last 2 days and some of the highest fatality rates, we have seen the high COVID numbers actually eat into that early momentum and that actually being broken. So we saw the all-share actually fall by 1.76% over the week, whilst the S&P actually fell by 1.25% over the week. In terms of some of the major market news, it is all related with the central bank this week. So the central bank actually earlier this week said that it would continue its ban on local banks from buying international sovereign bonds indefinitely. And this has really been done with the view to actually ease the pressure on the exchange rate as the rupee continues to depreciate. This further also outlines that Sri Lanka will continue its soft-pegged exchange regime. The central bank also decided on the 19th of May to keep the policy rates as is. This was fairly expected news, but the standard deposit facility rate was kept at 4.5%, whilst the standard lending facility rate was kept at 5.5%. The main reasoning behind this is that the low policy environment was to be maintained on the back of low prevailing inflation environment, coupled together with a well-anchored inflation expectation and renewed challenges posed by the third wave of COVID. In good news with regards to this news is that we've actually seen private sector credit actually hitting record levels. And this is primarily on the back of a low interest rate environment. This has actually even surpassed pre-pandemic levels. And March 2021 actually was the 8th consecutive month where we saw gains in this area. And the CBSL has actually forecasted private sector borrowings to actually grow by 14% this year compared to the 6.5% of 2020. This actually signals, and this is a very key and strong point, is that local companies are gearing up for a speed up in economic activity. So it is some much needed good news. In terms of some of company news, we've actually decided to highlight this week on the Hayley's group, which actually posted its highest ever revenue and profit figures in its history. So financial year 21 results show that the group's top line and profit after tax increased by 14.7% year over year and 385% year over year to 242 billion and 14 billion Sri Lankan rupees respectively. The strong performance can actually be attributed to the continued growth in the company's export-oriented business amidst this pandemic. In specific, we're looking at the group's hand protection, purification, and textile arms. So these would be dip products, ACARB, and MGT. These three counters actually provided the most robust growth figures on the back of heightened demand for key goods such as PPEs. We maintain that the counters such as DIP and HACOP will continue to grow and post much robust figures moving forward, as the demand for key essentials such as PPEs will remain high as the pandemic unfortunately shows no sign of slowing down. Furthermore, we maintain our buy recommendations on DIP and Hayley's, as the positive results of the two aforementioned counters will have a positive bearing on their parent company. In terms of a numerical breakdown, we've also shown that with Hayley's revenue, the hand protection, i.e. DIP, has actually shown a 70.1% increase over the last year in terms of top line top line generation, whilst the purification products, that's hereby, show a close to 12% increase year over year, whilst textiles, that is MGT, show close to 21% increase year over year. And if we look at it from a quarterly basis, dating back to 2 years, looking at 1Q FY21 for both companies, that's really when the pandemic actually kickstarted in Sri Lanka. So if you're looking at a global context, we're looking at 1Q FY21 onwards. And we can actually see that in this period, especially when it comes to DIPT, they've really increased the revenue generation, close from 9 billion to 13 billion, whilst their profit after taxes actually increased from 721 million to 1.9 billion. The same can be said for hereby, which we have seen robust growth figures throughout, with revenue generation actually increasing quite steadily. In terms of the currency and bond markets, we see that the rupee has depreciated further this week. That is primarily due to the current prevailing COVID climate within the country. We have, however, on a slightly positive note, Sri Lankan bonds have rallied in the last quarter on the back of an increase in demand for short tenure bonds. And also we have seen a partial alleviation of the risk of the country defaulting on its foreign debt obligations because a 1.5 billion US dollar currency swap was agreed with China. So during the week, we actually saw most bond yields remain steady, but as we maintained from last week as well, we still say that short tenor bonds seem the best way to go given the current climate. In terms of the commodity market, we saw oil fall as there is a fear of inflation, but actually we also saw oil prices fall by more than 2% on Thursday, marking the third successive day of losses after it was acknowledged that progress had been made to lift US sanctions on Iran, which will boost crude oil supply. Negotiations still remain far from over, and we need to highlight that. However, some European refiners and Indian refiners have actually reevaluated their crude purchases and made room for Iranian oil. However, we must note that we do not expect this to happen till the latter end of this year. So this is maybe an counter to look forward to. In terms of the copper prices, it actually rebounded from Wednesday's slump with expectations of demand being resilient from China, whilst aluminium actually fell due to a global dip in markets over fears about rising inflation. In terms of the global markets wrap, European stocks actually rally as UK retail figures suggest that demand is going up. So European markets were slightly higher on Friday after Wall Street snapped a 3-day losing streak. Asian markets were actually slightly on the subdued ends, where markets were mixed following the US rebound. In terms of the UK market, we saw retail sales jump by 9.2% in April, double the average of that projection made by Reuters, which does suggest to us that there is a pent-up consumer demand finally beginning to kick in. So that is one key counter that we look at when it is to see as a signaling function for increased economic growth. Europe will also be keeping an eye out for May's Purchasing Managers Index, which would give some indication on the health of the economic recovery across the continent. And this report will be out today, that is Friday the 21st of May at 3 p.m. UK time. That really wraps up most of the news articles that we have for this week. I will hand it now over to Harin, who will go over the technical analysis regarding our all share and our pick of the week, that is DIP products. Over to you, Harin.
Thank you, Nuwan. So the daily RSI of the index is 47.51. And currently we were able to see somewhat of a decline today, where the index actually the low is actually 7,154.42, and it is currently at the monthly support level 7,200. So we can see how the index has actually got rejected from this area a couple of times, and it has come down again. So basically we do have a structure high here, so I would be considering this area as a structure high and a key resistance zone. So in order for the index to reach 7,500, it needs to break this structure high, which would be somewhere around 7,350 and 7,400 400 in between. So that needs to be clearly broken in order to reach the weekly resistance 7,500, 7,600, and also the top line of the trend line that we can see that has a declining trend line here, and also an inclining trend line here, which makes it a symmetrical triangle formation. So looking at from the EMA levels, so a couple of days back, we can see starting from Monday, we were able to see that how the index was basically above the EMA levels, and how it was basically in a positive region. So now that it is in somewhat below the EMA levels, 18 and 8 EMA levels, it is quite crucial. So the index actually needs to reject from this area in order to reach the 7,350, 7,400, that previous structure high level. Else we'll be able to see a breakout of this trend line, the inclining trend line, where it would actually just bring the index to 7,000 key level. So the next is dip. So here we have a supply zone, which is considered as also a resistance zone, 57, 57.5. So initially we were in a ascending triangle formation where we had a top line here, a flat line. So the price has actually come to the daily support level 52, 53 in between, and also the RSI is 45.26. So it is quite trading below the 80, 18 and 80 EMA level. So the price actually needs to get rejected from 52, 53 key area of support in order to test the 57, 57.5 again. Else a breakout could break out below this support area could actually bring the price more down to the next support level. So so we can see that how the price has got rejected a couple of times also from 52, 53 daily support. So hopefully if it gets rejected once again from this area, we'll be able to see the price reversing to upside again and breaking 57, 57.5 key area and this declining trend line. We'll be able to expect the next daily resistance, which is 62, 63. Thank you. Over to you, Nuwan.
Thank you, Harin. And that concludes our second week of presenting this weekly update for SC Securities. As always, if there are any more clarifications that you need regarding this weekly update, most of the information can be found on this document that we will be sending across to our client base. So as always, thank you for joining in, and we hope that you have a pleasant weekend. Goodbye.